Welcome to our webinar entitled AI in Financial Services, Fundamentals, Legal Landscape, the White House Action Plan, and the Future Outlook. This webinar is being released as a two-part podcast series, with the second part releasing next Thursday, December 11th. I'm Alan Kaplinsky, the founder and practice leader for 25 years of the Consumer Financial Services Group at Ballard, Spahr. And I'll be co-moderating today's webinar with my colleague, Greg Szewczyk, who is the practice leader of our Privacy and Data Security Group. Okay, so a few introductory remarks before we get to the meat of our program. The financial services sector is entering a pivotal moment where technology and regulation must align themselves in new ways. Artificial intelligence is no longer just a back office enhancement. It's a strategic priority for all institutions, regulators, and consumers alike. As described in the event overview, where in the invite that was sent to you, our webinar will span three key areas. We'll talk about the fundamentals of AI, what it is, what it isn't, how core concepts like machine learning, generative AI, and model governance are being applied, the evolving legal and regulatory landscape, both federal and state, including how laws that have been on the books for many, many years apply to AI situations such as the Fair Credit Reporting Act, Equal Credit Opportunity Act, and statutes which prohibit unfair and deceptive or abusive acts or practices, which in the industry we refer to them as UDAP statutes. Then we'll be talking about the future, and we're very pleased that we have with us today one of the architects of the America's AI Action Plan, which was released by the White House on July 23rd. In short, as AI adoption accelerates in lending, payments, risk management, customer service, and more, the regulatory frameworks that accompany it are catching up. And for institutions that are in financial services, that means both opportunity and obligation. And we'll be talking about both of those, both opportunities and obligations throughout our webinar. So we're going to start with a primer on AI. We'll talk about key regulatory milestones and frameworks, federal, state, and international, where we are today and where we are heading. We'll talk about how the White House's action plan shapes that landscape, how it affects your strategy, operations, and compliance burdens. And then we'll talk about forward-looking considerations, how to prepare your governance, data strategy, risk management, and business planning for what is coming down the road. If you're working in a bank, a credit union, a fintech, payments company, servicer, consulting advisory firm that's supporting those players, today's topic is also in your wheelhouse. So let me now introduce my co-chair first and co-moderator. Greg Szewczyk is the practice leader of our Privacy and Data Security Group. He counsels clients on data governance, artificial intelligence, and emerging technologies, helping organizations navigate complex privacy, cybersecurity, and AI regulatory requirements. He's a frequent author and a speaker on these issues and regularly advises financial institutions on responsible data practices and compliance strategies. Let me then introduce the rest of our panel, and it is certainly a distinguished panel. First, Dean Ball, Dean is a former senior advisor in the White House Office of Science and Technology Policy, where he focused on AI, data policy, and technology governance. He's written extensively on AI policy and serves as a policy researcher and commentator on responsible development and deployment of emerging technologies across all sectors, including financial services. And as I mentioned at the outset, he is one of the architects of the White House AI Action Plan. Then we'll turn to Charlie Bullock. Charlie is a senior research fellow at the Institute for Law and AI, where his research examines the intersection of AI, law, and public policy. He's published and spoken widely on the implications of AI regulation for innovation, ethics, and compliance, and he advises organizations and policymakers on practical frameworks for AI governance. Then we also have Christian Stout. Christian is the director of innovation policy at the International Center for Law and Economics. His work explores how competition, intellectual property, and regulatory policies affect technological innovation. Christian frequently testifies before government agencies and legislatures on issues related to technology policy, AI, and the digital economy. And last but certainly not least, another one of my colleagues, Charlie Brown. Charlie leads our technology industry team, our patents team, and he represents companies in high-stakes litigation involving cutting-edge technologies. I think you will agree with me, certainly by the end of this program, that these are all outstanding subject matter experts who bring deep experience at the intersection of technology, policy, and regulation. Well, with all those introductions out of the way, let's dive in. And at this point, I'm going to hand the program over to Greg Szewczyk, who will describe the format of our webinar, lead us through the agenda by asking our speakers a series of questions. Greg, floor is yours.
Thanks, Alan. And thanks to everyone for joining us. Before we jump in, I just want to kind of go over the format of the webinar because it is a little different than what a lot of other webinars will do. Rather than have a webinar that's focused on slides and materials like that, we're going to have this more focused on a presentation and on a discussion amongst the panelists. So, because our goal is really to focus on the conversation. We want it to be more of a panel discussion than a presentation of slides. So I'm going to walk through and ask questions to a specific panelist, but then we're going to use those as springboards for conversation amongst the whole panel. So you're not going to see slides throughout this session because we really want it to be a discussion rather than a focus on written materials that we're trying to teach. Substantively, we're going to stick to the agenda that you see before us that Alan just worked through, but there's a good chance that we will go off on some tangents. And I hope to some extent we do, because as Alan just described, the panel that we have up here today is really experienced and accomplished and has a lot of expertise in this subject today. And it's a changing area. Some of the things we're going to cover today, we are getting new information about it just within the last week. And so some of the topics are necessarily going to move beyond what is strictly in the outline that we developed when we were preparing for today. We have prepared, and you will get some references for the written amounts that we have had, because these panelists have published a lot of information. So with that, we're just going to dive in. The first subject that we're talking about is AI fundamentals. And my first question to the panel is going to be an annoyingly broad one, and I'll address it to Christian to start. At a very high level, how do you define artificial intelligence?
That's a great question. And sort of to your earlier comment, this is such a changing area that many things come in and out of the definition of what counts as artificial intelligence, depending on which policymaker's looking at it, what court's looking at it, what the subject you're talking about is. in many ways, we've actually had what you can think of as artificial intelligence since at least the early 70s. There were different algorithms that were attempts at trying to, essentially put smarts into the way computers handle problems. Obviously, what we've seen in the last few years has been acceleration of what the earlier trends had established. But broadly speaking, you can think of artificial intelligence as an umbrella term that encompasses a lot of different sub-technologies. So one of the things I usually stress when I'm talking to policymakers or writing on the topic is really there's no such thing as a single artificial intelligence. What you frequently get called artificial intelligence is a lot more coming from marketing or investors trying to attract capital. What you really have are sort of specific sub-technologies that do different kinds of things in different ways. So for instance, the autocomplete in a search engine that helps you figure out what the next likely term you want to search is, that's a form of artificial intelligence. But large language models that you can chat with is another form of artificial intelligence. So it really is a lot of different sub-technologies that are attempting to accomplish tasks more efficiently than, say, traditional if-then structured logical programs.
Either of the Charlies, any difference from your perspectives?
Yeah, I actually run into this question a lot. I sometimes do consulting, give feedback on state and federal, bills. And so in every one of these bills, you have to define AI. And the sort of go-to definition is this one that originally appeared in the 2019 NDAA, basically. It says, a machine-based system that can, for a given set of human-defined objectives, make predictions, recommendations, or decisions influencing real or virtual environments, and that uses machine or human-based inputs to perceive real and virtual environments, abstract such perceptions and models through analysis in an automated manner, and use model inference to form options for information or action. And this is, I don't know how good of a definition it is, but at some point people just said that's all right. But it's extremely broad, and this actually causes problems. I was talking to Chase Banks, head of AI policy, about a month ago, and he's mentioning that he didn't like some particular state AI law, and the reason was because it defined AI sort of lazily and very broadly, and because of this, it was pulling in a bunch of things that it didn't expect to pull in, a bunch of behaviors like that Chase's customer service chatbots or whatever do. So they were facing tons of compliance burdens that the state didn't realize they were imposing on Chase because of this overbroad definition of AI. So it's actually an unsolved problem how to define AI exactly. And this continues to cause, very expensive problems in the real world sometimes.
Right. It's to Charlie's point right there. You do see that kind of definition popping up in a lot of the state legislative attempts. And frequently, many commenters will point out that things like Microsoft Excel spreadsheets in some circumstances qualify under some of these very broad definitions. So a lot of the attempts to create like a single AI definition are unsuccessful because, as I said, AI is really a collection of very different technologies that are doing different things depending on the context.
Yeah, and I mean that's something that we struggle with both from the public policy side of things when we're looking at legislation, but also on the contractual side of things. And it's almost the flip side of it where we find ourselves when we're assisting clients on the contracting side of it, going with that broad net and then trying to carve out some of the, the spreadsheets and other technologies that we're not looking at. And you almost, understand to a degree where those legislators are coming from, but, struggle with that. So, if you're putting yourselves in the, the legislative drafting role, what do you think it kind of strikes the right balance where you're capturing the right types of technology, but not, including too much with it? How do you take that approach? Do you pass broad and then exclude, or do you have more of a specific definition, knowing that the technology is moving?
Yeah, that's a great question. I don't want to give away too much of what we're going to talk about later. So I get the same kind of question when I advise private clients about how to understand AI in their organizations legally and how politicians are maybe going to look at them. And I have the same conversations when I talk to people at Congress about how do we do this. The problem is, it was sort of embedded in your question, like, well, which technologies do we specify? Honestly, we need to start thinking about this from a technology neutral perspective, I believe. What you need to think about is, well, what are the capabilities you're concerned about? It's not so much which algorithm did you use to accomplish something, is so much as did a harm occur, or is there a harm likely to occur, what kind of harm is likely to occur, what kind of breach is likely to occur. And then you can sort of walk backward from there and say, well, if you breached it with a Microsoft Excel spreadsheet or with ChatGPT, I kind of don't care. What I care about is what's the likely type of breach I'm expecting, what's the likely type of fraud or harm I'm expecting. And then the question is, how would we remedy that? How would the FTC have the resources to investigate, say, fraud at scale? Fraud is still fraud, whether you're using an LLM or not. What they might not have is enough resources to investigate it. Or if you have a private client that you're contracting with who might want to use AI to sort of amplify the scale of a production process or something. So it might be harder to catch harms. You're still going to have the same kind of harms most likely, or same kind of potential breaches. It just might be harder to detect. So then you want to focus on, well, what is involved in helping each party detect that particular kind of problem with the relationship, not versus trying to understand like, well, they might use the latest version of Claude and that might complicate things.
Yeah. For me, when I'm working on definitions, I usually am working on bills that try to address what are called frontier AI systems sometimes, right? The most powerful, most advanced systems. So we generally don't want to sweep up small models created by startups. We generally don't want to sweep up like, your microwave or something that does in some sense make decisions, but is not what we think of when we think of artificial intelligence. So I think sort of the best practice there is to give an initial statutory definition and then also authorized follow-up regulatory definition from either a state or a federal regulator, depending on where the law is being passed. And when you do that, you give them some guidance, but generally it's a highly technical process defining like frontier advanced AI system. The sort of simple way to do it is just to put a threshold on like the amount of computing power that was used to train the model in question. But there are other ways to do it as well that aren't quite so crude. It's just like, oh, here's a number of operations that you had to use to train the model.
Yeah, so one of the takeaways here is clearly like how you're defining AI depends on who you're talking to, right? I mean, so when I'm giving a CLE on sort of like the high level, patenting AI, like the definition I started with is just it's software that mimics human intelligence, and then you can just go from there. But when we're writing a patent application that relates to AI, it starts to matter about what specific invention is involved with AI, because to someone's earlier point, it's not new. And one of the first patent applications I wrote 20 some odd years ago was for a university on using images to diagnose diabetic retinopathy using fundus images in the eye. And so depending on what a specific technology is, that's going to sort of dictate the definition when it comes to when you're writing a patent application, how you're going to define AI or whatever technology is involved. And the audience there is the patent office as opposed to Congress or whoever else.
Right. And sort of to that point, too, one of the things that I usually press for for the different parts I talk about is, like I said before, specificity and context. Because as you start to drill down into different sectors of regulation or sectors of the economy, it might make more sense to then start having technological operational definitions. So, for instance, in like the housing context, there might be a way that AI is involved that allows landlords to sort of evade some of the fair housing requirements, for instance. And it might make sense to sort of tailor the regulation around that. Or we saw the deepfakes, different deepfakes laws, right? It's reasonable to I think, to say that AI makes it so difficult to detect when a deepfake is made that maybe there needs to be some purpose-built regulation or laws that help to try to get that edge case. But then what you're talking about. You're saying you're using one of these foundation models that is capable of being multimodal and it's capable of generating images that look substantially like a certain subject, and you're deploying it in a certain way. Like now you have some definitions that you can actually use to be useful.
So, kind of, you mentioned industry specific and how that, context matters for the definition. So that's a good chance to kind of move on and talk a little bit about the regulatory landscape, specifically as it relates to the financial services industry. And I want to start by kind of focusing on state-level privacy laws. And with the CCPA's recently finalized automated decision-making regulations, that is a prominent example that's going to impact a lot of the attendees on this call. And, Christian, I know you submitted some comments to the CPPA earlier this year. So I was hoping you could just give kind of a brief overview of the automated decision-making rules to the audience for the members of the audience who might not be quite as familiar. So, obviously high level, not asking you to recite.
Yeah. Yeah, it went through a number of potential versions. I think the ones they came out with were not as bad as I feared they would be. I'm a little salty that the privacy regulator is regulating AI now, because I feel like that's a mismatch myself, but it is what it is. So the automated decision-making rules that the California regulator put out made it essentially so that starting in the 2025 to 2026 area, businesses using AI that quote unquote substantially replace human decisions, including things like credit and employment, areas like that, they need to provide notices that they're using AI or automated decision-making technology for those purposes. And they have to offer an opt-out for consumers in some cases. And then they need to be able to perform impact assessments about how their use of AI might affect the rights of individuals in those particular areas. I think that what that means is that the new rules they're going to require these firms to be able to explain to individuals how their automated tools work, what their purpose is, and, like I said, an option to request an opt-out or request a human review potentially of decisions that were made. Where that's going to be complicated is that a lot of these tools are, I don't know if I want to say inherently unexplainable, but the way they're designed is to look at large patterns of data and try to find correlations between them. So you will have clients that are going to run into complications where they're getting models that produce really good actionable data, but they are not themselves explainable in an easy way. And frequently, a lot of times when you try to use these models to get them to explain themselves, they kind of make up what they're explaining. So there's going to be some areas, like if I was advising clients in California, there's going to be some areas where you're going to want to try to limit the amount of AI you're using, at least until you see how that regulation shakes out in enforcement practice.
Yeah, and I mean, I can tell you that, what we've seen with clients is this is going to take, there is a runway. I mean, the provisions related to ATDM don't kick in until 2027. But, as it's been for those of you who don't know, this has been, Christian mentioned, several iterations of it. They did narrow it in scope over the iterations, but this has been a fairly long process for these regulations to be drafted. They've gone through iterations, but it's going to be a pretty heavy lift for compliance. It's going to take a lot of operational costs. There still is the GLBA exclusion at a data level for financial services, but it will apply to financial decisions that don't fall within the scope of that exception. And it will apply to things like employment decisions as well. So there's going to be a lot of use cases that financial service companies are using this type of technology, and a lot of cost to compliance. And so, the question that I would have, and I know some of you guys have written on this bit, is, how do you see this kind of complex legal decision and compliance and the cost to come along with that impacting competition, and what kind of advantages it might give one type of company over another?
Well, that's the big question, right? So one of the things that I would flag for your clients is that they may be using systems that they've been using for 10 or 15 years that have been working great that now may fall under these rules. And so I would want to have somebody just do an audit just as a gut check to make sure that some of these systems that they haven't thought of as AI in the past might now fall under the definitions of the way the California regulator is looking at this, just to be safe. How does this affect competition? Well, you can see this in a lot of these sort of comprehensive regulatory approaches. So, in the wake of GDPR in the European Union, you saw the rate of capital formation decline. You saw a lot of the startups leave or not start in the EU. They started in other jurisdictions. The United States, we received a lot of that benefit, but a lot of other jurisdictions did too. So if you have these kinds of rules in some states, I think what you're more likely to see is a lot of these small startups fleeing to jurisdictions where they can, get started operating under the ambiguity of nobody knows exactly what they're doing when they start companies frequently. Like they have an idea and then they have to keep pivoting because you need to figure out where your market fit is. And if you have to keep doing compliance assessments every time you do a market pivot, you do not have a lot of runway on your initial capital raise. So you need to be very careful and very thoughtful. So, in the short term, I would expect California to see less capital formation. And honestly, over the last 5 to 10 years, you've been seeing a lot of companies start to relocate to the Austin area because they're a little bit more friendly. than California in these terms. That said, Texas has also been considering a pretty comprehensive AI law, so that remains to be seen for the future. But I think that's the kind of competitive dynamics you would see emerge.
And on that topic of comprehensive AI laws, I mean, we've seen, Colorado obviously passed one. We've seen hundreds of bills introduced in state houses over the last couple of years, but mostly with pretty little success. I see Dean just joined as well. We let them know that you had an actual fire drill and not a literal one. But the question I'll have, and we'll give you the first opportunity to answer it, is why do you think we've seen such little success in states passing these bills, even though there's been no shortage of appetite?
I think that Colorado did everyone in America a favor by going early and passing SB 205, which the governor knew was a bad idea when he signed it. And the way you know that is he said so. He said so in his signing letter. He said, this is probably an overwrought piece of legislation, and I hope we fix it before it goes into effect. They haven't had any luck doing that, though they're trying again. So we'll see kind of where that ends up. But, it has been such a nightmare for them in terms of how you actually get to the implementation stage. And by the way, there's some confusion about, like, with the AI Act, there's the general purpose sort of code of practice, which is mostly a fairly watered down transparency regulation, still stronger than I'd like it to be, especially on the copyright side of things. But, there's that's sort of the developer side of the equation. But then there's all of these regulations that apply to, regulated industries. And I think a ton of applications of AI in financial services end up being considered, quote unquote, high risk. And same with Colorado SB 205. The SB 205 really mirrors these deployer user side provisions, the AI Act, and not so much the somewhat lighter touch code of practice. And the EU is having the exact same problem of how is this actually going to apply, because it's this fundamental problem, not just of being comprehensive, but of also just breaking down. Every piece of legislation is a conjecture of order. It's a philosophy about how the world works. It encodes all these assumptions, and one of them is that you can regulate at the level of the decision, like the consequential decision, the important decision. And I just think that that's fundamentally not the way the world works. Like, if you break things down in that way, it's just a very weird unit of account, very strange unit of regulatory account.
Yeah.
So I guess basically, in some sense, I think my friend Charlie Bullock would agree here that in some sense, it's the federal system working well. It's the federal system working out well because SB 205 happens and it's a mess, and every other state kind of realizes this and is like, we kind of don't want to do that. Now we'll see. We'll see. I make very few predictions about what we're gonna see from the states and what's gonna move in 2026. But it does seem for the moment as though this trend of quote unquote comprehensive AI bills has been arrested in large part due to Colorado's awful experience. Though I do hope Colorado fixes their bill or delays it or something, because the other big problem that you have is, I've spoken to, I'm sure many people on this call are feeling this pain, but I've spoken to senior executives at Fortune 500 firms who tell me, we're not based in Colorado, but we're a multi-jurisdictional firm, of course, and we have to spec our deployments of AI inside the company to SB 205. Because we have some economic nexus in Colorado. And so I've heard this from more than a few people in regulated industries, at large regulated enterprises. So, I think that's very problematic. And I hope we do fix that.
And I want to just, we've got several hundred people on the call. So I just want to give a little background to make sure, everybody's familiar with what Dean's talking about here. Is, a couple of years ago, Colorado passed what people, and I'm from Colorado, so what people are in Colorado refer to it as the ADAI Act, or the Anti-Discrimination in AI. It was passed when the governor signed it. He did so with reservations, asking the state legislature to revisit it and fix what he saw as some issues with it, because there was another full legislative session before it would go into effect. The state legislature did not take any action when it did. There was a special session of Congress. It took it up again. It did not make any substantive changes, but instead pushed the effective date to the end of June of next year in 2026. There will be another legislative session before then as to whether the legislature will be able to make any agreements during this third attempt. We don't really know. Relevant to this particular call, one thing that I have heard from a lot of my financial services clients that is problematic is that there is a limited exception for financial institutions in some contexts in the bill, but it doesn't really explain exactly, how broadly that applies. And, it's only subject to it only applies if there's published guidance by their regulator that are as stringent as the ADA Act. I think something that everybody was hoping would happen if the bill wasn't changed on that front is that because the ADAI Act has rulemaking authority for the AG, that implementing regulations would come out that would at least provide some guidance on the scope of that exception. But what we heard from the AG last month that we held was that the AG is not going to publish any regulations before that 2026 or the June 2026 deadline at least, because on the assumption that something will change during the next legislative session that ends in the middle of May. So, we're kind of in this limbo with our all clients, but for financial services clients of how do you go about trying to position for potential compliance with all this uncertainty going on? And to your point, Dean, there's been somewhat of a stop on other states, but now we're in this. Charlie Bullock, I know you've written about differences between statutory and regulatory definitions in the context of frontier AI. I know this is a little different. Any thoughts on the difference between statutory definitions and regulatory definitions here, whether that might be something that would be helpful, or how you go about interpreting or pushing for clearer definitions?
Yeah, sure. I'll step into the role of the pro-regulatory guy, which is not usually entirely my lane, but for purposes of this call, it sounds like somebody needs to play that role. So yeah, I don't know that I've heard from a lot of people that the Colorado bill is not a great law. I think that's probably correct. I hope it gets fixed as well. I don't have strong opinions on how that would happen. I didn't work on the bill. I do think that there's often, I call it regulatory doomerism, right? People are very excited about hypothetical future kind of abstract harms from regulation. These have not occurred yet, right? For the most part, I heard Christian talk earlier about a comprehensive Texas bill that was going to scare business out of Texas. If it's the bill that they've already passed, it's pretty tame, right? It's it just says don't do unconstitutional things with AI, which is it's almost entire. I can't imagine how that could place a burden on, a lot of companies unless they were doing unconstitutional things or whatever. In general, I think that you hear a lot about a patchwork of state regulations. I think that's a legitimate concern. I do think that so far what we've seen, there are a lot of bills. They mostly either do kind of common sense things, or they do things that are not that burdensome to AI developers, or they don't get passed, right? A lot of the bad ones that people are worried about end up not getting passed. So I think that sometimes the concern about regulation is not necessarily overblown, but premature, I would say. Not in the case of the Colorado bill necessarily, which has actually been passed, but in the case of people who say general things about 1,000 bills or something. That's kind of my take.
And there's a slight counterpoint too. You do see a lot of firms that are thinking about the EU AI Act, just not deploying AI in the European Union because they're not sure, to your earlier point, that how do you comply with it? So when you have ambiguity about how you comply with these laws, one rational choice is just not to deploy products that have the AI in it.
I see that a lot with clients. It's something that is a lot easier to do when it comes to international deployment as opposed to something domestically on a state-by-state basis. One more question on the regulatory front before we move on to the White House's AI action plan. We've been focusing on these regulations that specifically impact financial services. We haven't really talked a lot about the IP concerns. Charlie Brown, what have you been seeing with respect to either regulatory or litigation or legislative issues, specifically for patent or IP concerns as it relates to the financial services world?
So on that front, specifically with regards to AI on the patent side of the house, there's we could do a whole other CLE on that when it comes to a topic called subject matter eligibility when it relates to software patents, under which AI patents would fall into that. And there's been several bills proposed over the years, and there's like 3 of them bantering about right now to try to fix the status of the law right now when it comes to subject matter eligibility, which at a high level is just a sort of a threshold question of is this invention the kind of thing we want to allow people to get a patent on, or is it otherwise just someone trying to patent an abstract concept? And right now, there's been a lot of development in the AI space from the Federal Circuit, and the new director of the Patent Office is sort of very, very pro AI patenting. There's been some recent movement there in a positive direction, and so there's sort of maybe there's some hope that one of these bills will get through to try to straighten it out. But right now, it's can be challenging to get an AI software related patent through the Patent Office. You have to establish a certain technological angle to get your AI patent through under the current state of the law. So it's a bit of a mess. But there are some bills that aim through a few different techniques to try to clarify that. But it's anybody's guess if they're going to actually make it through.
Be sure to join us next Thursday, December 11th, for the second part of this 2-part series. All of our panelists will return to delve deeper into the White House AI Action Plan and the future of AI in financial services. Thank you for listening and have a great day.